Good evening. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore, and we are a multinational hedge fund, 100% profitable. Today, we would be covering three important topics in our Facebook Connect, which has happened very recently. Number one, the institutional investors in India are consistently selling, which precisely means that as we speak, March end, institutional investors sold 1.5 lakh crores in India. You heard me very right. And in April also, institutional investors were net sellers. Now, today is Monday. Wednesday, we would have FOMC meeting. FOMC stands Federal Open Market Committee. And FOMC meeting, we expect a rate hike of 50 basis point. Now, if US would be hiking the 50 basis point, then this would definitely have catastrophic impact on the global economy and also on the US economy. Number one, if US would be hiking by 50 basis point, then they are already standing at a debt of near about 32 trillion US dollars. It means that their refinancing cost would go up substantially across all tenors. And US would be paying this. They're already paying a very hefty amount as a refinancing cost. I wish US to increase the rate by 50 basis point in the meeting on Wednesday, because that will pave the way of the dollar default very soon. I know that many people who are watching, probably later on they would be watching on the YouTube, they would disagree or they would criticize because I'm using a word dollar default. Similarly, like in 2018, I talked about the Indian startup ecosystem. And today, do you know what is happening in the Indian startup ecosystem? Similarly, few months ago, I said that Asian economies would be, bankrupt very soon. And you see what is happening in Sri Lanka, what is happening in Nepal, what is happening in other Asian economies, including Pakistan. Keep the Indian politics aside. Please be rest assured, one by one, all Southeast Asian economies will collapse. So, if Federal Reserve would be hiking the rate by 50 bips, then this would pave the wave of the dollar default. And that would be very important, because China and other countries of the globe seriously wish dollar to hike the rate. That's it. As we speak today in the financial markets, as always, the markets ended up in loss because institutional investors in India are quitting. And if this trend persists, probably for another few months from now, then institutional investor would be only in the books, because they already sold 1.5 lakh crores. And if they would be selling again, then it would have a catastrophic impact on the Indian capital markets, because domestic institutional investors do not have the big firepower to invest. They have the limited firepower. From the last 6 months, they are resisting. But how long they would be able to resist, that is a big question, at least to me. While as far as the interest rates are concerned, the treasury bills, the government securities, the overnight index swaps in India, the interest rate are more or less intact. Like if I speak the 12 months treasury bill, which is always I would say discounted instrument, is near about 4.80%, while 10-year government security is 7.12%. As the debt level of India is rising, that too substantially, sooner you will see a substantial hike in the interest rates of government securities. The reason is not the debt, plus the reason is the Federal Reserve also. Because if the Federal Reserve would be hiking the rate, say by 50 bips, then RBI left with no other option but to hike the rate. And if RBI would be hiking the rate, then the Indian financial system, which is already in a deep mess, would further go into the mess. So day after tomorrow, Wednesday, would be a very important meeting, and our desk would continue to keep a watch on that. We are completely hedged. Whether FOMC would be hiking by 50 bips or 75 bips or not a single basis point of hike, to us it really hardly matters. Let it be honest. Today in the market, Nifty is near about 17,000, and I remember that few months ago the so-called legendary investors, they were giving the predictions that Nifty will go to 25,000, or some intelligent person was even talking Sensex will come to 100,000. And I was like, what the hell you are talking? Because Sensex touching 100,000 means that the ground reality is completely different than what we envisaged in the system. But anyways, we all know that what is happening what is happening. So I would like to give you a few glimpses of what I have downloaded today. First of all, the IT sector in India is in complete mess for two reasons. Number one, the euro is falling. As we speak, euro is near about 1.05. And God knows euro will again try 1.02 also. I'm not sure about that, but if euro will try 1.02, then we know what is going to get happen. Anyways, so according to the statistics, around 38% of the Indian IT companies' revenue is coming from Europe, which means either it is coming in GBP or it is coming in euro. If we speak about GBP is 1.25 and euro is 1.05, which means that both fallen a lot. If this trend persists in both GBP and euro, then it would have a substantial impact on the profitability of the Indian IT companies, especially the money which is coming from Europe. And like I said, 38%, I repeat, 38% of the funding, basically the remittance, is coming from, is coming from Europe. 38%. Second problem which Indian IT company is facing, that institutional investor is not buying IT stock anymore. I'm not naming any specific IT stock, but Indian IT stocks were the darling of institutional investor. Once again, I am not naming, but I have seen 2 or 3 stocks, those who were like up and up, and I was every day thinking what the hell is going on, because fundamentally speaking this is not possible. But at a given point of time, when institutional investors started selling, then the same stocks came down. And today there are many IT stocks who are at throwaway prices. Example, Wipro. Wipro is near about 500 rupees. near about 500 rupees, considering the balance sheet of Wipro, considering the cash which is lying in the books of Wipro, then it is an attractive price. I repeat, do not treat this as a call. I am not asking or telling anyone to buy Wipro. I repeat, I am not asking or telling anyone to buy Wipro. Similarly, if we look at the Tech Mahindra, which is near about 1200 rupees, considering the balance sheet of Tech Mahindra, it is slowly coming to intrinsic value. More or less the story of TCS, Tata Consultancy Services, Infosys and SCL is intact. I remember that from the last few months, Indian media is giving sufficient hype to Wipro, to TCS, Tata Consultancy Services. And thanks to the mess which is created known as buyback. But you know what had happened? You know where the TCS is right now. Although TCS tried very hard, the marketing, 18,000 crores of buyback program and whatnot. See yourself from your eyes where the TCS is. So Indian investors again fooled by Indian media by giving hype to TCS. Please be rest assured more such foolishness would come. I'm always long in the metal sector as far as the market is concerned, and I strongly feel that the metal sector is, really very important sector for any economy. And I feel that the Russia-Ukraine war, which is going, and currently Russia-Ukraine war is in a very tactical stage. I think tactical is the right word because Russia is very close to Kyiv. Although Ukraine forces are trying very hard to stop Russia, but unfortunately Russia is close to Kyiv. I don't know what would be the scene, but having said that, whatever news which is coming on the Google is definitely not conducive as far as Ukraine is concerned. But I wish, Ukraine will win this war. But having said that, God forbid, if Russia won the Ukraine, then maybe many more, I would say, European countries are on the cards. I'm not naming any specific European country, but you can check on the Google, the names are there. In this eventuality, we may trigger a World War III. Having said that, United Nations General Assembly, United Nations President himself, NATO, they all failed to resolve this problem. So I am consistently watching on the Russia-Ukraine war, and I would let you know. Today, the 30 script Sensex, which includes the IndusInd Bank, NTPC, Power Grid, Tata Steel, HDFC, ITC, HDFC Bank, Ultratech Cement, Bajaj Finserv, Bharti Airtel, Nestle, Mahindra and Mahindra, Axis Bank, TCS, ICICI Bank, majority of them ended in the losses. I remember about Bajaj Finance and Bajaj Finserv that few months ago how they were like beyond valuations. But now if you look at Bajaj Finance and Bajaj Finserv, both are coming down, and they would come down more. Guys, always remember that no stock can retreat or stop the intrinsic value. Every stock has to come closer to the intrinsic value. Those who fly in the air without having substantial base, they have to come down. That is the beauty. But today I would like to focus more on a stock called Infosys, because I'm observing Infosys from the last several weeks, I would say. Infosys is currently trading near about 1540 rupees. And I remember that I remember that the Hindi media hyped Infosys and said it would touch 1800. And I was like, what the hell? How would Infosys touch 1800? And now check yourself that Infosys is very, very near about, 1540 rupees. And if institutional investor would continue to sell, which I foresee, thanks to the Federal Reserve and many other factors just like Russia-Ukraine war and all, in that eventuality, Indian IT companies will further come down. I see a substantial fall in the Indian IT companies if the FII continue to sell. And unfortunately, I don't see any reason why FII should, I would say, they'll stay in India. Overall, I am personally bullish on the metal sector. I have already uploaded the video on the YouTube. I am bullish on, the pharmaceutical sector, though I know that the Indian media is painting the negative picture of the pharmaceutical sector. And I'm definitely bullish on the IT sector, provided I will get 10% to 15% correction from here. And I'm sure I'll get the correction. I need to wait. I am waiting. I have no problems. Having said that, like I said at the beginning of 2022, that this year and the subsequent years would continue to be volatile. We need to be very, very vigilant. Hindi media will continue to do their role. You know how Hindi media work. This is Rahul Magan from Treasury Consulting Group. You know our personal number 9899242978. 9899242978. Have a great time ahead. Thank you.